Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everyone. It is December 6th. Hey, today's the big day. We get the jobs reports today for this week. So let's jump right into it. Let's take a look on the calendar here. We got the non-farm payrolls for the month of November. So the previous month, October, was at 156,000 new jobs created. That was actually revised higher. Now, I'll touch on that here in 1 second here, but forecast for November was 180,000, which, to be quite honest, that was going to be a stretch, but it actually wiped that out pretty high here at 266,000 new jobs in the month of November. So let me touch on this. The previous 2 months, October and September, are actually revised by 100, or sorry, revised upwards by 41,000 new jobs. The even we had a GM strike that went back into it, so that went back added back to the jobs for the month of November. That's about 50,000. Even if you factor the 50,000 in there, we still had 216,000 jobs, which is still a wonderful number here. So this is a very strong jobs number that I think surprised a lot of people, especially considering when you had the ADP coming in at 67,000 jobs for the on their report. Such a huge discrepancy between these two. Plus, we had a sample week in the month of November that was higher than what we've been seeing at 228,000. So it seemed like it was going to be ripe for a disappointment, and it came in much hotter than we expected. So as a result, on the unemployment rate, we had 3.6 in the month of October. Forecast for November has remained unchanged, and it came in slightly lower at 3.5%. So basically, we had more people coming in the labor force, but we also had double the jobs out there. So that helped bring down the unemployment rate, which gives us a base at a 50-year low. And then on top of that, we got average hourly earnings. Basically, there was no change in the month of October. However, forecast account for 0.3%. It increased 0.2%. It's not quite to forecast, but it did increase versus a unchanged remark here. Last but not least, we got the consumer sentiment for the month of December, and November had 96.8. Forecast was supposed to have a slight dip to 96.5, and it actually increased to 99.2. So, very good overall numbers here. So, as a result, you would expect stocks are up as a result of it. So, it's really liking the jobs data that we got. Economy's slowing down, however, the jobs, wow, I mean, it just keeps flourishing. So, analysts and everybody's kind of impressed with even though the economy is slowing down, we're still very high in terms of the jobs and to have people shaking their heads. Now, the hour, of course, everybody's watching the U.S.-China trade agreement. They're saying that Phase One agreement is progressing along. There's not really any whole news to report, other than, of course, we're watching the deadline of December 15th when tariffs will be implemented on $156 billion in Chinese goods. Chinese is taking measures of agricultural products at least taking off tariffs on pork and soybean coming into it. So, but there is some discrepancy as to how much they're going to be buying from us, stuff like that. That's what they're some of the part of the negotiations that are taking place right now. So let's see how this is affecting the bond market. And the bond market, as you see, we were way down a lot further this morning. Yesterday we did rebound a little bit. Just broke right back above our triple layer there, and right now we're down about 3 basis points from where we left off yesterday. So about the same time, pricing should be about the same. We don't really have much difference in pricing. So even if you consider that if we were priced down here, same thing like today, pricing should be about the same as what we saw yesterday. So mortgage rates should be unchanged in those terms here. Now we do gotta be careful. This is providing good support here for us, which is a good sign for mortgage-backed securities and mortgage rates. However, the yields also kind of broke above words. It's right now above its 25-day moving average, which got a lot of room here to go back upwards, and that could put more pressure on mortgage-backed securities and interest rates. Right now, we're seeing about 1.83 range, and so again, it's also kind of working its magic as well. All right, so that's pretty much a wrap. The mortgage rates are unchanged from yesterday's pricing. And if you guys are looking to buy or refinance, reach out. I'd love to hear from you guys. You can help me support my business by, talking at least and see how we can help you guys out. I am a loan officer with Pinnacle Home Loans, and So best way to reach me is direct message me or email me. We've talked a lot of different people from various needs, and we'll add you to, hopefully add you to that mix. Again, direct message or email. Email especially, I'm probably a little quicker in terms of responding, but however, I do respond to both. You guys have a great day, a great rest of your weekend, and we'll catch you guys on Monday. Thanks for watching. Bye bye.